Why are Cardano, XRP, and Chainlink tokens all in free fall today? Discover why Kim Kardashian has been associated with the acronym FUD. What transpired? Today, Cardano, XRP, and Chainlink are reversing their lunar flights and plummeting to the ground. They were down 12.81%, 17.68%, and 18.39%, respectively, in the preceding 24 hours as of 1:18 p.m. EDT. Cardano is now trading at $2.48 per token, XRP is trading at $1.14, and Chainlink is trading at $29.05. At this point, seasoned cryptocurrency investors have seen nearly everything, but they did not anticipate Kim Kardashian being accused for spreading FUD, or fear, uncertainty, and doubt, surrounding the sector. On September 6, Charles Randall, chairman of the United Kingdom's Financial Conduct Authority, claimed that celebrities like Kardashian put retail investors at danger by tempting them towards potentially fraudulent cryptocurrencies. Earlier this year, Kardashian endorsed Ethereum Max, a little-known penny stock cryptocurrency, to her more than 200 million Instagram followers. As a result, the token has lost almost 90% of its value since May's peak. Thus, what? The shift has prompted investors to reassess the underlying value of their altcoins, and regrettably for the majority, the cryptos have not yet caught up to their market capitalization. Consider Cardano's ADA, which began as a virtual non-entity last year and has grown to become the world's third largest token. Mike Novogratz, CEO of prominent cryptocurrency asset management firm Galaxy Digital, stated in a tweet earlier this month that none of the experts he interviewed anticipated Cardano gaining any traction with developers. Cardano's market cap has risen to over $80 billion despite the fact that it currently lacks smart contract capability and hence cannot be used to develop decentralized applications, dApps. Additionally, there are concerns that the Alonzo upgrade, which is expected on September 12 and would enable smart contracts, is not yet ready due to issues such as a lack of concurrent processing slowing down the network. Following that, XRP is the most susceptible to regulatory scrutiny of the three, as its developer, Ripple Labs, is embroiled in a litigation with the Securities and Exchange Commission. Although the litigation involves whether or not the sale of XRP to raise capital is the illegal sale of unregistered securities, that is not the primary concern with XRP. The cryptocurrency has grown to a market capitalization of $53 billion despite being decoupled from RippleNet, the liquidity solution used by financial institutions to perform cross-border transactions. Thus, it needs to be seen whether banks can successfully deploy XRP in addition to Ripple Labs' business software solutions. Finally, Chainlink is pioneering the integration of blockchain smart contracts with real-world data sources such as asset prices and retail payments. However, detractors question if services such as providing decentralized exchanges with cryptocurrency data deserve a $13 billion price. What is the next step? Each year or two, a new round of FUD hits the crypto market, shaking off those in it for the fast money. It's critical to remember that the long-term value of cryptocurrencies continues to expand in times like these. For instance, in 2018, Ethereum had a significant market capitalization but provided little usefulness through its smart contracts. Now, the Ether token is critical in the development of decentralized applications, decentralized exchanges, and decentralized finance solutions, among others, with a total addressable market value in the hundreds of billions of dollars. Therefore, unless one requires immediate cash, avoid panic selling. Three reasons for the crash of the cryptocurrency market. Crypto investors were taken aback by Tuesday's developments. Within hours, the Bitcoin market lost about $450 billion in market capitalization. Certain cryptocurrencies, such as Solana, SOL, maintained a profit throughout the day. On the other side, the cryptocurrency market has lost an average of 10%. What caused the cryptocurrency market to crash? We'll take a closer look at what caused this unexpected crash. What caused today's crypto market crash? Number 1. JP Morgan delivered a negative memo to its shareholders. JP Morgan advised its investors one day before the crash to avoid buying altcoins during this bull run. They alleged that retail traders were artificially inflating prices during fundamental technological developments, NFTs, scalable blockchains. This note sowed discontent in the cryptocurrency community, precipitating a massive sell-off. Number 2. El Salvador's crypto integration has gotten off to a shaky start. The cryptocurrency market began to suffer after El Salvador's wallet encountered technical issues hours after its launch. President Bukele was obliged to announce that they would temporarily go offline as a result of this. This rocky start to their crypto integration spooked investors and sparked a sell-off, which snowballed into a market-wide sell-off. Negative news and strong selling forces have a significant negative impact on cryptos, particularly given their high volatility. Number 3. It was inevitable that a price adjustment would occur. The cryptocurrency market has been climbing for an extended period of time now, with no signs of a price pullback. This extended upsurge is undoubtedly frightening, particularly when prices increase by more than 50% in less than a month. Green candles can be seen in succession for the majority of cryptos. When combined with negative news, this ticking bomb will undoubtedly erupt whenever profiteers enter the selling game. The cryptocurrency market in a nutshell. Most cryptocurrencies have lost value during the last 24 hours. The market as a whole shed more than 10% of its value. Filecoin, FIL, Index, MDEX, and Ethereum Classic, ETC, are the top losers, each losing around 20%. On the other hand, we may observe notable gainers on such a red day, such as Near Protocol, NEAR, and Solana, SOL, which gained 22 and 11%, respectively. Bitcoin, BTC, minus 9.2%. Ether, ETH, minus 12.7%. Cardano, ADA, minus 16.6%. Binance Coin, BNB, minus 14.7%. Tether, USDT, 0%. Ripple, XRP, minus 21.35%. Solana, SOL, plus 11.63%. Dogecoin, DOGE, minus 17.83%. USD Coin, USDC, plus 0%. Polkadot, DOT, minus 19.20%. Bitcoin falls to its lowest level in a month as adoption struggles in El Salvador. The most valuable cryptocurrency plummeted to a low of $43,050. Bitcoin fell as much as 17% to its lowest level in a month, as El Salvador's cryptocurrency adoption appeared to be stalling. The largest cryptocurrency plunged to $43,050 in New York on Tuesday, losing more than 10% in an hour before recovering roughly half of its losses. At one point, the Bloomberg Galaxy Crypto Index, which monitors some of the largest digital coins, fell as much as 19%. Mysterious sell-offs, or sell-offs for which no legitimate reason is discovered until a large period of time has passed, are significantly more prevalent in crypto than in other asset classes, said Stéphane Ouellet, CEO and co-founder of FRNT Financial. The market continues to be significantly more opaque and global in scope than the majority, if not all, other important asset classes. The collapse was likely accelerated by the fact that over 336,000 traders had their accounts liquidated in the last 24 hours, totaling around $3.6 billion in cryptocurrency, according to statistics from Byte, a cryptocurrency futures trading and information platform. The pullback comes as Bitcoin confronts one of the most significant tests of its 12-year history, with El Salvador becoming the first country to legalize it as a form of payment. President of the Central American nation, Nayib Bukele, announced on Twitter that the project's digital wallet, which was previously unavailable due to technical difficulties, is now available for download. For users who register with a Salvadoran national ID number, the wallet, dubbed Chivo, comes preloaded with $30 worth of the money. Users on social media platforms such as Twitter and Reddit discussed plans to buy $30 worth of Bitcoin in bulk on Tuesday to commemorate El Salvador's new law taking effect. The possibility of a coordinated price pump is reminiscent of prior web initiatives targeting meme stocks such as GameStop. Mr. Bukele also stated on Twitter during the price decline that he was buying the drop, noting that the country now controls 550 Bitcoin. At one point, the terms cryptocurrency and cryptocurrencies were trending on Twitter. Tuesday's sell-off represents the most significant reversal of the recovery that had lifted Bitcoin about 75% since late July. Other coins that had experienced even greater price surges fared worse. Cardano has lost approximately 15% of its value. Tuesday, according to CoinMarketCap.com, while Dogecoin, the frequently mocked joke cryptocurrency, fell about 20%. Traders also expressed concern about the lack of seasonality. September is the first month in the last decade in which Bitcoin has failed to generate positive gains. The token fell during the calendar month in 6 of the preceding 10 years, losing an average of more than 6%, Bloomberg data indicate. I believe it is some of the system's speculative excesses being squeezed out, Bloomberg Intelligence's Mike McGlone said on Bloomberg's live program Quick Take Stock. Ether, the second largest digital asset, too experienced a price decline, falling from $3,900 to around $3,000 in a couple of minutes. Additionally, shares of companies associated with cryptocurrencies fell. Riot Blockchain fell as much as 10%, the most since July 27, while Marathon Digital fell 11%. Coinbase Global, which provides an online trading platform for such digital currencies, fell as high as 5.7%, while MicroStrategy sank 9.5%. Nonetheless, Bitcoin found support and bounced off its 50-day average price. It recovered some of its losses and is now trading above its 200-day moving average, which is now around $46,000. We have frequently witnessed in the past where many traders take profits at psychological levels such as $40,000 and $50,000, said Leah Wald, Chief Executive Officer of Valkyrie Investments. The market tends to sell off as a consequence of limit orders put just above these critical price levels, or as a result of stop losses set after they are exceeded, as investors seek to lock in profits in the event of a market retracement. Many observers were taken aback by Bitcoin's movements. The coin is well known for its volatility, but the speed with which it sank and quickly recovered part of its losses surprised many. As of 12:39 p.m. in New York, It was trading at around $47,370, down 8.8%. While it was unsurprising that Bitcoin did not soar in response to the El Salvador news, this pullback is strange, especially given that it occurred mid-morning and not immediately following the announcement, said Matt Maley, chief market analyst at Militaback Plus Company. It will not be a problem if it was a fat finger at a hedge fund or brokerage firm. If it's something else, I'll become significantly more concerned. Swiss BBVA Bank announces the launch of a new generation of digital investment accounts. Banco Bilbao Vizcaya Argentaria, BBVA, Switzerland's second-largest bank, has launched a new digital investing account that enables clients to diversify their portfolios through innovative industries. BBVA Swiss Bank has launched the 100% digital investment account, often referred to as the next generation account, a new service geared at satisfying the needs of a new generation of tech-savvy customers looking to invest more innovatively. The account can be utilized in environmentally friendly companies and even in cryptocurrency. Customers can invest in a library of firms and funds arranged around 11 disruptive technology themes, including autonomous vehicles, robotics, circular economy, 3D printing, and even cryptocurrencies. The catalog will replicate the portfolios of prominent investors like Cathie Wood and Warren Buffett, allowing consumers to invest in both traditional and digital assets. BBVA Switzerland's Customer Solutions Director, Javier Rubio, stated the following about the new development. Customers can invest in traditional assets such as stocks or mutual funds as well as in a cryptocurrency wallet for cryptocurrencies. Along with mutual funds, the next generation account will enable consumers to use, store, purchase, and sell Bitcoin, as well as access any other cryptocurrency wallet they like. The wallet will be fully connected with the bank's mobile app, which allows users to monitor their Bitcoin holdings, as well as those of other digital assets, funds, and investments. The Bitcoin wallet is incorporated into the bank's mobile app, simplifying the process of submitting taxes. It will grant consumers access to a verified account and comprehensive transaction history. BBVA will provide its new banking solutions in a variety of markets around the European Union and South America. The client must be a resident of an EU member state to open and operate such a digital investment account. Additionally, Chile, Peru, Argentina, Colombia, and Mexico will be able to purchase the goods. Rubio stated that the bank is seeking new investors with its next-generation investment opportunity. BBVA and financial services for cryptocurrency. BBVA Bank's commitment to expanding its digital asset trading services remains unwavering. BBVA Bank began offering Bitcoin trading and custody services to its Swiss customers in June. Beginning June 21, the bank will offer Bitcoin trading to all private banking customers interested in cryptocurrencies. BBVA Bank said around this time period that its Bitcoin trading services would be included into its asset investment catalog for private investment clients. Clients can view the performance of their Bitcoins alongside the rest of their portfolio in this manner. Additionally, the bank claimed that it intends to expand its services to additional cryptocurrencies, but underlined that the cryptocurrency desk will not offer advisory services for digital assets. Currently, the bank allows customers to convert between Bitcoin and fiat currencies automatically in order to avoid losses due to price volatility. The cryptocurrency market experiences a massive decline, with $2.6 billion in longs being liquidated. Bullish run expectations have taken a significant hit as the cryptocurrency market enters a lengthy break. The massive correction is said to have resulted in the liquidation of approximately $2.6 billion worth of long positions in the futures market. Traders who have been impacted by the incident are currently licking their wounds. Bitcoin fell to $43,000 on Tuesday, only one day after reaching $52,000. According to statistics compiled by cryptocurrency data aggregator Bybit, liquidations occurred across multiple exchanges, with Bybit's derivatives market suffering the brunt of the action. Bybit leads on liquidation list at derivatives exchange. According to the data, Bybit accounts for 35.27% of all liquidated positions, Huobi accounts for 30.01%, and largest cryptocurrency exchange Binance accounts for 17%. On Huobi market, the greatest single liquidation order totaled $43.5 million. All of these losses occurred inside an hour, according to reports. In the previous 24 hours, about 330,000 traders have had their long positions closed. The price of the flagship cryptocurrency fell by roughly $10,000. As it turns out, El Salvador's Bitcoin Day failed to produce enough momentum for the top crypto asset to break through the $52,000 barrier, where it remained until the surprise collapse. El Salvador's Bitcoin law took effect in the early hours of September 7, prompting predictions of an increase. The crypto market, on the other hand, has significantly underperformed these predictions. El Salvador, surprisingly, purchased 400 Bitcoin on the same day and increased its holdings by another 150 Bitcoins, bringing the total amount of Bitcoin held by the national government to 550 Bitcoins. Bitcoin's dominance levels off at 40%. According to CoinGecko, the leading cryptocurrency's market domination is currently 40.34%, while altcoins have suffered more losses than the former. Market capitalization is not immune to the wave of losses, having lost $384 billion of its total value in the aftermath of the dip. Despite the sharp decline, market watchers remain optimistic. Perhaps the upswing had grown a little too strong and the market required a rest before witnessing another upsurge that is anticipated to push the flagship cryptocurrency and several other altcoins, including Ethereum, to new highs. As of press time, Bitcoin has reverted to $47,000, or 8% below its earlier price. As it pulled cryptocurrencies such as Cardano, Solana, Litecoin, Stellar, XLM, and Bitcoin Cash, BCH, to $52,000, it has now driven them back to the bottom. However, Solana is proving to be a fighter, going higher on its own merits following Tuesday's ATH of $193. Be prepared to lose your entire investment, cautions the United Kingdom's regulator. As cryptocurrencies grow in popularity, investors should be cautious of speculative crypto tokens promoted by celebrities and social media influencers. That was the message from Financial Conduct Authority Chair Charles Randall, who urged investors to exercise caution in light of a recent crypto push by media celebrity and socialite Kim Kardashian West. When she was recently paid to encourage her 250 million Instagram followers to speculate on crypto tokens by joining the Ethereum Max community, it may have been the single largest financial promotion in history, Randall wrote in prepared remarks for Monday's Cambridge International Symposium on Economic Crime. Kardashian didn't have to mention that Ethereum Max, not to be confused with Ethereum, was a speculative digital token launched a month prior by unknown developers, one of hundreds of such tokens that populate cryptocurrency markets, he explained. Market Watch attempted to reach out to a representative for Kardashian for comment. While Randall stated that he was unsure whether that particular token was a scam, he highlighted that scammers often pay social media influencers to assist them pump and dump new tokens based on sheer speculation. Certain influencers promote coins that ultimately do not exist. That is because it is difficult to predict how long any crypto token will survive, given the lack of assets or real-world cash flows to support their valuations. However, this does not deter individuals from investing due to a fear of missing out mentality. There is no shortage of instances of people who have lost savings as a result of being enticed into the crypto bubble by delusory promises of rapid riches, sometimes as a result of listening to their favorite influencers, who are willing to betray their fans' confidence for a fee, he said. He reiterated that while 2.3 million Britons presently own these types of tokens, 14% of that total purchased them using credit, increasing the risk of loss. He stated that approximately 250,000 people feel they are protected by the financial services compensation scheme in the United Kingdom if something goes wrong. To be clear, these coins are not regulated by the Financial Conduct Authority. They are not protected under the Financial Services Compensation Scheme, Randall explained. If you purchase them, you should be prepared to lose your entire investment. Randall stated that regulation of crypto asset marketing must include paid advertising on online platforms, and regulated organizations must demonstrate they have handled the hazards associated with unregulated activity involving digital tokens. Investors in the United Kingdom have few options when it comes to publicly traded enterprises trading in cryptocurrency. Among them is Argo Blockchain ARB, -6.29%, a cryptocurrency miner listed in the United Kingdom that filed for a $75 million initial public offering on the Nasdaq Global Market last month under the ticker ARBK. The company went public in 2018, and its shares have risen 331% thus far this year, following a 489% gain in 2020. Meanwhile, KR1, plus 4.31%, is a publicly traded investment firm focused on the blockchain ecosystem. Shares increased by 447% in 2020 and 575% thus far this year, following a 740% gain in 2017, but fell by 49% and 9% in 2018 and 2019, respectively. Kim Kardashian is under investigation for promoting cryptocurrency on Instagram. This week, reality star Kim Kardashian found herself embroiled in yet another scandal, but this time, it has nothing to do with her sisters, Kanye West, or a diamond earring lost in the water. This time, the drama is being fueled by cryptocurrency. Kardashian was singled out by the head of the Financial Conduct Authority in a speech Monday. The Financial Conduct Authority is a regulator that monitors over 51,000 enterprises in the United Kingdom. Charles Randall, a socialite turned billionaire, used his platform at the Cambridge International Symposium on Economic Crime to advocate for tighter regulation of crypto tokens and social media marketing supporting cryptocurrency. Randall took issue with an Instagram story Kardashian shared in June promoting the yield-based cryptocurrency Ethereum Max. When she was recently compensated to encourage her 250 million Instagram followers to speculate on crypto tokens by joining the Ethereum Max community, it may have been the single largest financial promotion in history, Randall explained. She admitted this was a #AD. However, she was not required to mention that Ethereum Max, not to be confused with Ethereum, was a speculative digital token developed a month earlier by unknown developers, one of hundreds of such tokens that populate cryptocurrency exchanges. Bitcoin, celebrities, and scams. While Randall stated he has no idea whether Ethereum Max is a scam, He took aim at influencers who were paid by scammers to assist them in pumping and dumping new tokens based on sheer conjecture. Speculative trading is the act of purchasing and selling futures contracts based on an investor's forecast for the price of an asset, in this example, a digital coin. It is often regarded as a risky activity. Randall contended that advertisements like Kardashians do not adequately convey the risks associated with cryptocurrencies. While experienced investors who are active on the r/Bitcoin forum may be aware of the intricacies, those leisurely surfing Instagram on their lunch break may not. Along with Kardashian, Ethereum Max has been supported by former NBA player Paul Pierce and boxer Floyd Mayweather. The excitement surrounding them instills a strong fear of missing out in certain consumers who may be unaware of the risks, he added. There is no lack of instances of people who have lost savings as a result of being enticed into the crypto bubble by delusory promises of rapid riches, sometimes as a result of listening to their favorite influencers, who are willing to betray their fans' confidence for a fee. Ethereum Max, for its part, told us that while altcoins in general are risky, the company is devoted to openness. A large portion of our marketing and public relations efforts are focused on generating awareness and interest in our project. These efforts are always made with the intention of raising awareness, not of encouraging people to purchase, as the Kim K post was simply intended to raise awareness of the project and its utility, it stated, adding that the goal is to encourage people to research our project, speak with community members, get involved, and ask questions before making a decision. Speculative trading and crypto tokens are also unpopular on this side of the pond. In the United States, Securities and Exchange Commission Chairman Gary Gensler has dubbed cryptocurrency the Wild West due to widespread abuse and a scarcity of trustworthy information. Between October 2020 and May 2021, the Federal Trade Commission claimed that almost 7,000 Americans reported losing more than $80 million to crypto-related scams. Gensler, like Randall, advocated for increased regulation in a May interview with CNBC. We need to update and refresh our laws to guarantee that, while retail investors and other individuals have First Amendment rights to free speech and association, they are not misrepresenting the public or manipulating the markets, he added. A prudent approach is to thoroughly research any investment before investing your money, to avoid schemes that promise you will become wealthy quickly, and to avoid financial advice from strangers online. We hope you enjoyed watching and listening to this video. Please let us know your opinion in the comments area below. If you found our content useful, please like it and share it with your friends. Also, don't forget to subscribe to our channel and hit the notification bell for more crypto-related contents.